Right, thanks for joining me, guys. So I'm going to talk about where I think the market's going to be end of the year. But before I do that, I thought it would be a good idea to talk about this heat map for the US markets. And what interests me, what stands out for me, is how the semiconductors have had a fantastic year. Nvidia has gone crazy this year, and software AI is the talk of the town. But equally shocking is the way in which this healthcare sector, so much red on the healthcare sector, very beaten up, and energy is beaten up as well. Hardly any green on the energy sector. Okay, so yeah, software and on one end and healthcare on the other. We'll take a look at healthcare because I'm very interested in healthcare. In the meantime, let's just have a look at, let's answer this question, where is the market's going to be end of the year? So, having talked about these heat maps and semiconductors software versus all the red on the healthcare, let's move on. Sorry, I just repeated that because had a few people just join in YouTube and Zoom. So, right, let's move on and address this question. First of all, I need to get rid of all those pen marks. Right, so if I pinch back on this Dow, let's do this for NASDAQ. It's easier on NASDAQ. I say easy, it's more relevant on the NASDAQ. Um, so we've potentially got this massive bull flag up here, but is it that good? Is it that bullish a chart? So we just recently broke out here. We poked up here on the Tuesday 7. A great move up on Friday. We've got US inflation and retail sales this week. Let me just remind myself what data we've got. So I've momentarily forgotten. UK jobs in the morning. Expecting improvement in UK jobs in the morning. Okay, US inflation tomorrow. And we're looking for a decent drop in UK inflation because we've got UK inflation Wednesday morning. We're looking for a drop from 6.7 to 4.7. We're for a 2% drop on CPI, core price inflation. And yeah, US retail sales on Wednesday, which we're looking for a negative number on that. Right, okay, enough of that. So if we pinch back on this NASDAQ, you will note that all we've done is climbed back into January 22 levels. So we've got all this resistance up here on the NASDAQ. And what that pink zone does is it illustrates how we fell out of the sky very early on in 22 and all the pullbacks with a series of lower lows, lower highs until we sprung out in March or in January, February, pulled back in March, and then went on a decent run into the summer, and then formed this bullish pattern, this flag pattern up here. But all the time, if this Nasdaq can't sustain this, at any point, if we see any major weakness in this area, then I think we're going to just fall out of the sky quite quickly. In the meantime, the markets are, I shouldn't be talking negatively because these markets have particularly in this last little spell, have had a decent pull up. If we now look at the Dow, if I want to show you something, I want to show you this 50-day average with a color zone on it. Just look how much time we spent under the 50-day average this year on the Dow. And what this color zone does for me is, this is why I've just got some concerns here. limited time up above the 50-day average, significant dip, limited time up. Okay, so we wiggled around here, but we didn't spend a massive amount of time above the 50-day average as we went into the summer. And we spent all this time under the 50-day average until this November pull higher. This is what concerns me about these markets. And I mean, scanning through the stocks today as well, particularly, I mean, UK stocks, why the FTSE's up, standing up so much, I don't know really, because so many UK stocks are just dragging their feet. And yeah, do the same thing in the FTSE, and it would spend vast amounts of time under this 50-day average this year, which is why I was selling into the second half of last week and took it off down at this support. So you can see the support down there at 73.20. So as soon as we showed any kind of support down there, I just took the short off. Because these markets are moving in small moves anyway. But let me stand back from this one. Let's put a weekly chart up and stand back from this. And you will note that this is where you can see this big, this apex here. Because if we fall out of that apex, I think we're going to fall quite hard. We had a similar apex. Okay, we had a pandemic up here. So fingers crossed we're not going to head for a pandemic. But look at this series of the way we knocked into that resistance. And that's what we're doing up here. We're knocking into this resistance. In fact, we're not even that far from the pandemic drop on the FTSE. So that's why we need to be, I think we need to be very, very careful. And if we do need to be defensive, then what stocks or what markets should you be in if we need to be in a defensive mood? So I'll answer that and make some suggestions for that in the next, I'm not going to talk for a long time. I'll talk for another 10, 15 minutes. And then if you guys have got questions, or any time you've got questions, just punch them in the chat box. And if I would welcome anybody who wants to have a chat, and I'll turn your mic on if you want to do that. Right, so these markets are very, very vulnerable. And what I've been really tracking, what I always track anyway, is this dollar. Do you know the sovereign debt of the US is 122% of GDP? So what Trump did when Trump came, let's go back in history a bit here. When Trump came in, he came in on a ticket of lower taxes and lower spending. He delivered on lower taxes, but he did not deliver on lower spending. So the fiscal issues that the US are already facing is horrific. The aggressive move up in the interest rates now means that the US will be spending very soon, they'll be spending more money on servicing their debt than they will be on servicing their defense industry. Bearing in mind the US is a massive spender on defense, you can get an idea of why I'm concerned about what this market is doing. Okay, so we had this big, lovely big, who knows, we could end up with a nice big push up into the year end, which is cyclically, that's what you'd normally expect. So just because I am erring on the side of caution here, and I has got some negative issues to this market, doesn't mean to say this market can't push up. And all the time that, well, in fact, we closed higher on this Dow last week, and I'm sure we closed higher on the NASDAQ. Yeah, so we had two decent, it's a weekly chart. We've had two very decent weeks up on these US markets, but the FTSE is just pinned right back. Well, understandably, given the GDP levels, the appalling low level of growth in the UK. particularly since 2016. Right, so that said, let's delve into, let's have a look at the gold. So, I mean, my ideas for defensive investing at this stage is actually to look at the healthcare sector. The healthcare sector generally, at the moment, it's beaten up, generally doesn't care where you are in the economic cycle because it's a staple. We all need healthcare as well. Hopefully we don't, but at some stage we will need some degree of healthcare. Hence the reason why it's a good defensive sector to be in. Anybody just joining us missed the front end. I've looked at heat maps, so when you see the recording, take a good look at those heat maps. Right, so the gold is just coming to settle on this 50-day average on the weekly chart, and we've had a spurt up from about a $10 spurt higher off the lows today. So the problem is with the gold is we've got a massive gap down here, and I think it needs to be filled. There's the gap. In fact, let's zone that. I just think we've got so many lower closes on this gold. I suspect we may get a squirt down to fill that gap quite soon. Right, so if we look at, so I would leave gold alone at the moment. The oil is attempting to bottom down here off having touched 75, so we're 300 pips off of the 75 mark. I think as we crawl back into this big drop from the 7th, I don't think, unless we close above 80 sometime in the next, or this week, absolute latest, I think as we crawl back into 78, 80, I think this could roll over. I think this could drop a lot further. So if we crash into that trend line, I think we're going to come down to 70 at least, which is the last year's lows. Okay. So let's stick around with a couple of other commodities. I've got to give you an update on orange juice because orange juice is just amazing. Look at this breakout pattern from down here in July this year. Well, we broke out from January and spent all that time above the 50-day average. And this recent pullback has got bought. Has been bought, I should say. That's terrible English, isn't it? Got bought. Anyway, so as you guys know, I've been monitoring the corn and the wheat very, very closely, and this is a sweet move today with the corn. So I have been buying dips in this corn. If we can close above $5, then I think that opens the floodgates. And if we find ourselves climbing above this triangle, so if we hold $5 and continue to close higher up here, I'm looking for this to really power up and get back up to 8+. The fundamentals, I have to say, this year have favoured the downside, and you can see that in all the time as the high has been selling. So the yield has been very good, crops have been very good, but it's all about what this does into the new season now, which we're not going to find out until we get reports in late winter. So I'm buying this in preparation for a potential breakout. So that's one defensive idea. I'll talk to you about the others in a minute. Let's cut across to natural gas, cyclically falling off. So staying low. The copper, regarded as the new oil, with the boom in electric cars. So this to me looks like a buying pattern down here in the copper. And if we break above this neckline and hold above this 82, I think the copper will power up as well. Let's just pull back from that. So if I drag that right back. So if we close above 85, that's going to open the gates for 93. And I can see us climbing all the way back to at least to this 10, 11 up here on the copper. So we'll look at some copper miners in a minute. So I won't go into any other commodities. Let's just look at the stocks. So Barclays, just about clinging on. Well, we've got a gap up there at 148. It's getting bought, but got some concerns. If we drop under 130, goes under on 132 even, I think we're going to drop back to 126 and lower. But I mean, there is a huge amount of support here. If we, on the flip side of that is, if we close above 140, then I could see us getting back to 150, 160. So when I pull back on this weekly chart, sorry, it's the daily chart, you can see how we're basically in a massive box. Get this drawing tool out of the way. Oh, come on. I think we're just in a massive box. There's your box. So at the moment we've tapped the low, we've had a higher low here. In fact, I would even narrow that box. We spent much more time knocking between 125 and 162. We've only had one spike higher in February this year, and some minor spikes here. But yeah, that is trapped in a range, and the danger is we come in underneath this trend line here. So we nudge our way up to 150, 160, and then just roll over. That's my view. If I'm wrong, we're going to close above 160 and we get back to 180 pretty quick. I don't think it's going to happen. Right, and I think the same, this is Lloyd's. It's the same issue. Let's take all this rubbish away. It's too much noise on here. Can't look at a chart when you fill it with rubbish. Right, let's box this one in because this isn't a box as well. Let's go for 38. A lot of touches on 38, and we've got a couple of touches up there at 50. Otherwise, this has spent a lot of time under the 50-day average. Doesn't really matter what average you've got there, a 20, 50 doesn't make a whole heap of difference at this stage in the cycle anyway. So, okay, we've got a channel there. We've just recently touched the low of the channel at 39.40. So we could come to 45 looks likely at the moment. As only if we can get above 42, but it's not a great stock. It's not going to light the world up. Let's look at a couple of others before we move on. So Hargreaves, Lansdowne. Volume has been improving some on these lows, but got a potential head and shoulders here, but it's just got a lot of work to do. It's a relatively good defensive stock. Certainly these recent lows are good support levels, but that's got to close above 750 soon. If it does, that could open a move to £9 on that one. AJ Bell, which is a competitor. I don't like the volumes. The volumes seem to be much better in Hargreaves. Well, it's a much bigger outfit, Hargreaves. Right, let's quickly move across to commodity related. Because if you look at this TPI cap, hang on, this TPI cap. I'd see anything to do with commodities, particularly metals and softs. Is good. Any pullback into 165, I think that it's not a brilliant. It's spending a reasonable amount of time by the 50-day average. I don't normally talk about averages. Talk about averages a lot today. I think it just makes the point. Man Group, it's doing okay. Not brilliant. That's quite a tight range, tight low box down there. Rio perking up. That looks any move into 51, 52. I think it's viable on Rio. Elementis, not great. Gem Diamonds is not doing it. Yuck. Wow, Gem Diamonds having a torrid year. Let's look at some miners and move on because I don't want to talk for too much longer. You're very quiet. Anybody? So Pan-African. Ooh. That is not good news. Gold's picked up today, and this one is suffering. Mind you, it's picked up in the US session, not the UK. So that's worrying. The volume was slackening off there. So we start closing underneath this, doing complete open and close on the 15, and that's dust or toast, whatever you want to call it. Not healthy at all. Relatively thin market. So Hochschild, that's had a good run and is holding. So that's quite a contrast, isn't it? Quite a contrast to Pan-African. Let's look at American silver miner. Yuck. American gold miner. Yuck. Sylvania. Nope. So Hochschild is a rarity. Let's look at your TGAT. Right. So let me answer the question about what should you be buying. Let's take a look at a very quick look at a few proxy stocks. So Goldman's. Look at Goldman's. It dropped hard into 27th of October. A beautiful reversal pattern, reversal bar on the Monday the 30th, and that looks, the volume and the closes on that are very healthy. JP Morgan, not bad. Amex, it's not. So this is quite a contrast to the UK. Visa, McDonald's. Wow, this is quite the opposite from the UK. Right, the one I was going to look at is FCX, copper miner. Yeah, I think this is a huge support down here in FCX. Anybody who trades US stocks, this looks good. Got to close above 34. If this does, I can see this moving quite well. That's a huge amount of support. We broke up from here in November last year. and we ran to 46.5. So if we get a decent close either today or tomorrow, that is due a run. That was a decent profit. Look at this uranium miner, CCJ. Wow, that's really going for it. And let's look at Nvidia. Nvidia's been a monster this year, absolute monster. So we broke out in October last year. So autumn last year, we were down there at 114. So we've gone up more than 4 times since this breakout. And look at the volumes down there when we did start this journey. Very significant volumes down there. So we came up on good volume. When we pulled back, the volume came back in, and so on. Is the volume still coming in? Yes, look at it. It did drop off, but the last few days have picked up. Oh, I've messed it up now. So where can that one go? Wow, that's a major resistance. That's an extension already. Well, if that closes above 50, yeah, I could go further. That's a good question. Yeah, okay, let's come back to. Okay, I'll talk about defensive stocks in a minute. Let's just look at Andy's HMSO. I know you follow that one. I've not heard anything about this. I've not picked up on this. Certainly, we were down there at 20. We were very, very handsome support. No idea. It's been floundering. I've taken my eye off this one because it's been floundering around. Possibly it's coming up on the back of British land. Okay, yeah, you can see the support down there. Well, if that pulls back to 20, well, I would have thought you'd see 25 at least. Looks if it can go to 30. If it can close above 30 for any reason, I certainly wouldn't chase it. Hmm. Right, so stocks I like. Um, you're looking to, if you're in it, you're looking to sell. Yeah, I would definitely look to sell, given what I've just said about the UK and floundering markets. Um, yeah, there has been talk, and this is just I've heard this sort of fourth hand. There has been talk about possible moves on stamp duty and helping retailers. So maybe that's housing market is really stuck. I'm trying to sell a property at the moment, and I promise you, it is very, very dead, very quiet. Huge glut of houses on the market at the moment in the southeast. Um, but I'm not in a hurry, so it doesn't matter. So I like commodities. I'm liking the wheat and the corn a lot. I do need the dollar to stay low and not to spring up. That could ruin my party. A long way to go because we're just we're not going to see any data on the softs until second half of winter. Gold, I still think needs a decent pullback, which it could be why some of them, but more than likely why some of the miners are struggling, or some of the gold miners are anyway. The other miners, the aluminium and the copper miners are doing well. Steer clear of energy. The energy sector is very stuck. What I do like is, let me just pull it up. I do like the healthcare sector. It's beaten up, but I think this is a good time to start investing in this sector. So we're right on a major level of support on GSK. If that holds, I can see us going back to the highs and potentially getting back to 16, 17 on GSK. Be wary. There is, at the moment, this needs to, I would wait until this closes above 14.20. Otherwise, this could go lower. Pfizer is horrible at the moment. Pfizer is, that there's a potential buy signal there, but it turns out looks as if it's more of a short covering because this is making a new 23 low. So don't touch this unless if this closes back above 30, I'm all over it. To break a new low and to close back above it is extremely bullish in my book. I've seen many decent moves off of that. Of course, there's no certainties in this market, as you know, only too well. Vodafone, I still think this one is perking up. It's a good cash cow. This tech stock, IQE, is picking up. This was really beaten up. I got out before this drop. The volume was, you can see from the volume alone that this thing was just not going anywhere, or at least certainly not going up. The volumes are pathetic, absolutely pathetic. And so it got a huge drop off, huge correction. So let's just look at BT as well. Yeah, BT's done well off of this huge support down there. This is close to value. Market value is this at 128 based on the balance sheet. If at some stage this is going to be split, can't believe they've not split Openreach. That's why I've been investing in it in the past. If you see a pullback to this, it's a bad day, and that drops back into 115, 118. I think that's a buy. At the moment, it's sitting up too high. But if you see a pullback in BT, I think that's a buy. Right. Let's look at a couple more other members of the healthcare sector. And again, you might want to search for UK ones. These are US ones. This is gapped up. Medtronic. This is a good cash cow. Stocks like this have got they're huge in the diabetes product market. Huge. My daughter's got an insulin pump. It costs the NHS thousands and thousands just to maintain one pump. And these are the guys who manufacture my daughter's pump and her supplies. BMY. So these are good defensive stocks. Right, BMY is beaten up. Don't touch unless that closes above 51. Again, look at the volume. Appears to be a positive volume spike on the 30th. Decent close higher on the 3rd, and then it just drops. Okay, in the meantime, so I'm done. I've overshot. I meant to. Wow, Rolls-Royce is still running. I think Emirates have ordered 95 Boeings today. Let's have a look at Boeing. Yeah, there's Boeing. So volumes have been improving after the move off of 178. That looks. don't chase it. If you're interested in Boeing, see if it drops back to the breakout area. Don't chase it. Tullow, yes, Tullow done a deal, haven't they, today, or announced a deal? Yeah, that looks a lot positive. That chart is looking better. So if you could pick up 30.31 with a stop underneath this 29, I think that's a very healthy volume. Yeah, that's it. A debt deal with Glencore. Yeah, right. Yeah, I think I agree with you. I think I've been liking Tullow once we had this push up on the 9th. Overall, the energy stocks. I mean, look at this oil provider. Look at this. It's falling out of the sky. This huge push up in March, and it's dropped out the sky. It looked good here on early November, but wow, brilliant. Okay, I'm going to disappear now. No more questions coming in, so thank you very much for turning up, and I will